Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, September 23, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? The first thing we'll notice is a very light, narrow ranging, low participation, low volume type of day. The intraday range, as you can see from this little mini candle up here, was very slight from high to low. A high of 570.33 and a low of 568.10. It's basically, we'll just round it to 20 S&P handles, which is a very narrow ranging day in the big scheme of things. You don't have to know the numbers. Just look at the chart. You can see the other candles on the chart and what they represent. This is one of the narrower / narrowest candles on the board. That being said, we're past the kabuki stuff from last week. We're past the rate cut from the FOMC. We're past the fall equinox, which happened over the weekend. Now we've shifted into a new season, if you will. Did the market basically run up into that period of time? Yes. Does it have to turn on a dime the next day if it's going to turn at all? No, that doesn't have to happen like that. Either way, we're on the lookout for a change in character or a shift in operation or the way the market is behaving, behavioral operation. She's above all the moving averages. What does that mean? That means that we heed to the trend. The trend is your friend until further notice. And can we have a bogey on the downside that we can say, hey, look, as long as she stays above this place, then she's in a pretty darn good bullish position, period. How about if we use 565.16 represented by the blue horizontal trend line? Why are we using that? Well, for one, it's Friday's low. Friday's low is 565.17. Well, what is it about 16 that makes it so important? And why was Friday's low right there? Because this was the former high that we've now broken out above. 565.16 was the former high over here. Never hit it here. Broke out above it. Friday came back to retest it after just breaking out above on Thursday. And she remains above it today. So we could say above 565.16, that's our bogey. We'll call it our bull bogey. I would write that down, put it on a sticky note, keep it next to your computer for a while. It won't be important later, but it's important right now. Now we can narrow things down a little bit. Here's what we can say. Above 565.16 on candle closes intraday and then daily and so on and weekly. She's in a very bullish position. There's no trouble in the market. Below that, and we have some numbers on the downside, inside the number members and inside the number live room members. We'll have a beat on those numbers on an as-needed basis from an intraday and trading perspective. The flip side situation. She's basically at new highs, not a fresh new high today, but last Thursday was a new high. So up in this area, she's at new highs. And until she puts in a bona fide sign and or signal of a trend change, and you can make a case last Thursday was one. However, she's still hovering up here. That doesn't mean it still won't be a high. So we know that as of now, Thursday's high is also a bogey. Above Thursday's high on close, Thursday's high is 572.88. Above Thursday's high brings into view another leg higher. Again, one of those intraday, inside the numbers and live room pieces of information. Now check this out. Why are we looking at Carvana? Because something pretty neat, N-E-A-T, happened in the live room today. So one trader, I believe it was Andy, says, hey, look, a knock. I'm short in Carvana. Where am I going to exit this trade? Where's support? Here's what happened next. This is right around the opening bell. So I said, to the group, Andy and the group, 167.25 is an area that they should be able to bounce Carvana, so you really have to take some profit there. It's a good exit opportunity. Well, not only did the short trade happen there, meaning from a profit perspective, however, other traders that hear, hey, they can bounce it at 167.25, that's support, they're buying it up, right? They're hitting the offer at 167.25 and taking a ride back up in the northern direction. So we had what's called a double barrel situation in Carvana today, live room trading. Not bad for a rookie. Speaking of stuff that happened today, here's a snapshot of the beginning of Inside the Numbers commentary today, starting at 0:30. Now let's just glance at the early notes. Let's get a sense for where we are as the day hasn't even really begun to get underway yet. We're talking 6:30 in the morning, give or take. We had a support zone identified where certainly be willing to buy the market for a bounce back in the other direction, but by the end of the day, they never got down to the support zone, so we don't have to worry about it. However, there's always a however, but wait, there's more. What about the resistance areas? What about a target / overhead resistance? Well, guess what? 570.10 fit the bill on that one. 570.10. Right of the vertical is today's activity. SPY 5-minute chart. Blue horizontal trend line is exactly 570.10. How you doing? Target, overhead resistance. How you doing? Pause the video, read the notes, go back to the chart to double check the work. 8:45, a full 45 minutes before the opening bell even rings. Here's the way this one shapes up today. The bull case is where the 570 to 571.15 is both a target and an overhead resistance zone where they should be a reaction back in the other direction from if reached sooner than later. The flip side of where is support, kind of like a where's Waldo, they never dropped at all. We're looking for 568.10. We're looking for 567. We're looking for 566. They never got going anywhere in the downside direction. So all we had was the resistance, and then we had what's called a floater formation / operation. Pause the video, read the notes, go back to the chart, and double check the work. 570 is a target and the front end of overhead resistance. Slow tape, low volume on participation. Pause them, read them, go back to the chart to double check the work. It's a pretty quiet day all in all. We had a case of the Mondays. About one stock on the move today, General Motors. Entry price 47.33. Let's go see what happened. As you can see, 47.33. Came down to it, spiked it a little bit, came back up to it, and then rallied back into the closing bell today for the remainder of the day. Quiet day, but if you think about it, we got Carvana up on the board, we got a Spider Short up on the board, we got General Motors up on the board, we got an IWM or Camp IWM up on the board. What do we got going over there? Well, we got a down day, about 1/3%. So we do have relative weakness. It's not tremendous, but yet it is worth noting it is relative weakness. We have what's called a pullback situation. Basically, the last few days have been a pullback since the high that was made on Wednesday. That was Fed Kabuki Theater, FOMC, interest rate cut day. They are above all the moving averages, and certainly the trend is in fact your friend. Just to reiterate one more time, when you look at the bigger picture, you look at the weekly chart, for learning purposes, you look at the IWM and you say, all right, so all in all, what they really have done thus far, and they can continue to do this because they can go higher, what they've done is they've run a test in the neighborhood / of the breakdown candle high. So let's just call it the top 20, 25%. That's the neighborhood. As you can see, they ran a test in the neighborhood of the breakdown candle high, which happens to be the high in this run. It's not an all-time high. It's just a recent high, but that's important information. On a weekly chart, they're above all the moving averages. The trend is your friend, and technically speaking, there's nothing wrong with this tape. Today was a very light volume day in the IWM. If you look at the SPY, it was also a very light volume day. We talked about this in the live room this morning. And so we're just going to take it at face value and say it was a case of the Mondays, pretty light volume, light or narrow ranging day. And we'll move on and wait for them to tell us more on Tuesday. What's the market going to speak to? What's the market going to tell us? What's the market going to try and persuade us she's doing on Tuesday? What about the folks down at the transportation department? As my son would say when looking at this chart, look what happened on Friday. This thing is comfortably all the way up at 16.4. She's above the trend line. As a refresher, the trend line is the triangular pattern. If she breaks out above, that's bullish. Below is bearish. That's pretty obvious. At the end of the apex, time is up. Doesn't have to wait till the end of the apex to break out or down. And she's comfortably above after the Fed last week. And here's the back to the daily chart. All of a sudden on Friday, somebody tugs the rug, opens the lever to the trap door, falls back inside the trend line to close the week. Does anybody want to dispute A, that there is a trend line, B, that Mrs. Market knows about the trend line, and C, there is something to technical analysis? You think? Look at the volume in this candle on Friday, and what do I say each and every day? The transports, the folks down at the transportation department are my second favorite market leading indicator. A number one, canary in the coal mine. Why couldn't they close the week and day on Friday above the trend line? Why did they have to absolutely hurry up, haul ass to get back down there by the close of the week? There are no accidents or coincidences in the market. Everything has a reason behind it. Doesn't necessarily make it clear on the spot. Not a Johnny on the spot reason. It'll become clear as time goes on. Canary in the coal mine. What about the Q people? Do we have anything new to add for the Q people? They're eating time off the clock for the last few days, building energy to do what? To challenge this high over here to get above. They challenged it, but now they're eating time off the clock, building energy to continue above that high to the next important place. What's the next important place? We'll call it 489 for argument's sake. Might want to write that down, put it on a sticky note. What would change that current look for the Qs right now? Well, it wouldn't completely change, but it would bring into question in the short term getting below Friday's low on close, at least for now. Doesn't totally change the picture. It just slightly changes the short-term picture. What about the financials in the XLF? Anything going on over here? This is just a similar situation to what we just saw in the Qs. They're above all the moving averages. That's bullish. They're eating time off the clock in a pullback type of formation to do what? To build energy to get over this high right here. They tested it, but they're going to build energy as long as they stay above all these moving averages, or specifically the 20-period moving average. They're building energy to make another move higher to bust out once again for the second time to new highs. That is what is happening, ING in italics, ing. What about Smash Mouth? We still get that lower high situation in Smash Mouth. Can't get that out of my head. We got highs, we got lower highs, and we still have a lower high here until proven otherwise, stymied by currently the 100-period moving average. Last moving average in the line of defense before she starts to get above at least the last moving average in the line of defense. Doesn't look like the Q chart. Just as a refresher, Q chart slightly better above all the moving averages, eating time off the clock. Already technically broke the chain of the lower high situation. You go back to SMH and this is different. This is in a downtrend still. The SMH is a pretty good proxy for the tech space as a whole. Now, if they rally up and break the chain and break this high over here, doesn't mean they're going to new highs. It just breaks that chain and we no longer have to have that discussion. But the discussion has to be had because we're taking it at face value today. We are the umpire calling balls and strikes. That's the way it works. Have I told you how much I appreciate each and every one of you? Without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.